U.S. gold stockpiles hit record, right? And they're always pointing to the tariffs, but maybe what we're really looking at is a repatriation, because in this country, in the U.S., most of the gold is done in derivative form. That means it's just paper gold. It's not real. And you can look at the gold inventory in the COMEX warehouse, and they hit a record high. But could you please take a look at when this happened and it never got back to those other levels, and now it's even higher? Because the dangers are even more. So you have to ask the question, who is getting ready for what? Because there is some fat finger or big player here in the US that is demanding physical delivery. And of course we know, because we've talked about this, that a lot of that physical gold is coming from the Bank of England, among other places, but a player in the physical gold market. They're holding gold for a whole bunch of governments, and they're shipping that gold to the US, and then that gold is being delivered out to a private party. So I think that what we've got coming in the future is a massive government global pulling back of the gold. So my question is this really just about the tariffs on gold, or could this really be so much bigger than that, and it's a repatriation of the physical gold market? Time's going to tell what it is. We're going to keep paying attention to it, but I mean, I think it should be pretty darn clear that there are things that are falling apart, and if we're dependent upon the consumer is one big one. What are you going to do when this whole system implodes? Because that's what's happening, and it will. And that's why you have to have physical gold and physical silver in your possession. And you need to have sound money as a foundation for whatever else you're attempting to do. Because a properly diversified portfolio, okay, it can have some intangibles, it can have some cryptocurrencies, some stocks, some bonds, some mutual funds, some ETFs, but you darn well better have the gold to balance that out, so that when the dollar goes to zero, and you might not even believe that it's going to zero, look at the purchasing power chart, because the Federal Reserve is telling you that it's going to zero, and it's very close to that now. It's just that little layer of confidence. And if we're having to deal with higher inflation, what do you think that's going to do to the public's confidence in the currency and in those that are driving the economy? That's it. It's the last layer of confidence, and I see it going away.
Let's talk about what's really going on, because you're not going to hear this on CNBC or Bloomberg. You're not going to see it trending on social media, and your financial advisor sure as heck isn't going to bring it up. But somebody's getting ready for a reset, and it's not the average investor. It's not the retail crowd. It's the insiders, the sovereigns, the institutions, the ones who always act first while the rest of the world sleeps. What we are witnessing right now beneath the surface is a historic coordinated movement of physical gold. Not paper gold, not futures, not ETFs. I'm talking about physical metal, repatriated, vaulted, and taken off the grid. This isn't noise, this is the real deal. And if you're not paying attention, you're going to miss the biggest monetary shift of our generation. The US has quietly become a net importer of physical gold. Think about that for a second. We're no longer exporting, we're importing massive quantities. We're seeing record drawdowns from the Bank of England, from the LBMA vaults, and from Europe's largest storage facilities. That gold isn't going to China, it's not going to India. It's coming here, to the United States. And it's not going to Fort Knox either. It's going into private hands, hidden, silent, but strategically placed. That tells me one thing loud and clear. Someone with very deep pockets and very good information is preparing for the next phase of the collapse. And the mainstream media, silent. They'll talk about tariffs. They'll talk about Bitcoin. They'll talk about inflation cooling on paper. But they won't tell you that COMEX inventories are being stressed to the limit, that LBMA delivery times have gone from T+2 to T+8 weeks, or that the premiums on physical gold and silver are quietly climbing even when spot prices are flat. Why? Because confidence is the only thing holding this fiat system together. Once the illusion breaks, it's game over. And you have to ask yourself, if gold is irrelevant, if it's just some archaic relic from a bygone era, like the central bankers want you to believe, then why is it being accumulated at record pace? Why are so many central banks, not just from the BRICS, but from Europe, South America, even US allies, buying, repatriating, and hoarding gold? Why are banks that used to be fine with unallocated gold positions now demanding delivery? Why are 400-ounce bars being pulled from the vaults of the London Bullion Market Association and shipped across the Atlantic to be placed under lock and key in New York and Texas and Utah? Why is COMEX now delivering more physical metal than ever in its history? Let me tell you what this means. This is not some reaction to tariffs. That's a smokescreen. This is about reasserting monetary sovereignty. It's about positioning ahead of a complete revaluation of gold and a breakdown of the global dollar system. The supply of physical gold at current prices is inelastic, meaning when the price rises, the supply doesn't increase accordingly. It's not like paper where you can just print more. When the buyers get serious, and I mean sovereign serious, the only way to settle is at higher prices. And that's what's happening, quietly, relentlessly. And let's not forget what's happening to the US consumer. While the elites are hoarding gold, what's happening to the average American? Credit card debt is at an all-time high. Delinquencies are spiking. Savings are being drained. People are using buy now, pay later services just to buy groceries. Nearly 1 in 5 car loans are now seriously delinquent. The US consumer is breaking. This is a financial house of cards, and it's being held together with duct tape and denial. We're being told inflation is under control, but look at your rent, look at your food, look at your insurance premiums, look at the 40-year chart of purchasing power. The dollar is collapsing, and they don't want you to see it. And now, we're seeing the physical gold leave the global system and get locked down in the United States. This isn't a coincidence, it's a signal. The insiders know that a new system is coming. Maybe it's a gold-backed digital currency. Maybe it's a complete repudiation of the dollar's reserve status. Maybe it's a shift toward a multipolar monetary world where gold once again becomes the foundation of trust between nations. Whatever the outcome, the message is clear. Paper assets are being converted into hard assets, quietly, strategically, and if you wait for the announcement, it'll be too late. Let's bring this home. If you still believe the system is stable, you're not looking. The Fed is trapped. They can't raise rates without breaking the economy. They can't cut rates without unleashing inflation. They are cornered, and everyone on the inside knows it. That's why they're buying gold. That's why they're repatriating it. That's why they're preparing. So what can you do? Get physical. Don't wait for a headline to tell you it's time. Don't wait for your financial advisor to catch up. Don't wait for the dollar to hit zero, because by then, the shelves will be empty. The premiums will be astronomical. And you'll be holding a fistful of paper, begging for metal no one is selling. In this game, the early movers win, the latecomers lose everything, and the clock is ticking.
The consumer is very, very stretched to the point of breaking. But while tariffs themselves may not spur long-lasting inflation, empirical studies suggest they trigger an immediate, one-time upward shift in price levels that persists. So actually, I think they're contradicting themselves because they're saying that it's not going to spur long-lasting inflation, and yet prices that go up and stay up, okay. So they just don't want you to realize the truth of it. While tariffs create tariff revenue and favor domestic producers, for a minute, the price consumers must pay to buy imported goods will increase because firms typically pass some portion of the tariffs cost onto the consumers, or maybe even all of those tariff costs. Because we are a globalized system, the supply chains are all over the world. So even if we are a US company, that means that chances are pretty good that something is going to be imported that's going to be impacted by the tariffs. So there's direct tariffs, and then there's indirect costs that they pass on to the consumers. And that means higher inflation. Now, you guys know I've been talking about the fact that I think we'll see much higher inflation to come about by June. It might happen sooner, it might happen later. I don't know. But either way, of course, there's going to be more inflation. There has to be. The U.S. consumer borrowing surges by $40.8 billion, the most on record. But let me show you what these credit cards loans owned and securitized. So what people are doing in order to maintain their standard of living, they're borrowing more money to do that. There comes a point where they won't be able to do that anymore. Jobs at those same levels. Does this look great to you? Fed wanted to fight inflation? Well, jobs is deflationary, but it is the knock-on effect. It's like a domino. You lose the job over here, but these jobs were also being supported by all these private corporations, and that's getting lost as well. And I'm hoping you're able to see what's really happening, because the February job cuts alone, now understand there was a lot of Doge cuts in here, were 103.2% year over year. That's pretty huge. And the planned cuts last month were the most for a February since, look at that date, 2009. What was happening then? The great financial crisis. So they don't want you to think that that's where we are. But that's where we are. I'm showing you this. How will these job cuts impact consumer spending? Because what happens to all that discretionary income that they might have had when they had a job? That all goes away. Now, I looked at what the the Federal Reserve of Atlanta does their GDP now.
So let's dig deeper into what this really means. Because if you're seeing record levels of physical gold delivery into the US, but almost no mainstream coverage of why, then that silence should scream volumes. Let's think about it logically. Why would a massive player, whether it's a sovereign entity, a hedge fund, or a well-connected private institution, demand delivery of physical gold at a time when paper gold prices are relatively stable? I'll tell you why. Because they know that the paper gold game is coming to an end. The COMEX is still functioning, yes, but the number of contracts relative to deliverable gold is stretched beyond historical norms. We're talking over 200 to 1 in some cases. That's not a market. That's a ticking time bomb. And now you've got the US suddenly becoming the destination for physical gold instead of the exporter? Think about that. We've seen massive drawdowns out of the LBMA, out of the Bank of England's vaults. And let's be honest, we know there's rehypothecation there. Gold counted multiple times on balance sheets. But now we're seeing deliveries being made out of those vaults to the United States, where it is promptly delivered not into treasury storage, but into private hands. Who has that kind of clout? Who can demand delivery and bypass the delay windows? I'll tell you, it's not you and me, but it should be a wake-up call for us, because someone is clearly preparing for a monetary reset that the rest of the world isn't supposed to know about yet. The mainstream financial media wants to tell you that tariffs are what triggered this, that somehow the threat of taxing imported gold made big players suddenly patriotic. That's not how this works. What the tariffs did was trigger an audit trail. It made everyone start looking at where the gold was, who owned it, and whether they could get it. And what they found was a shell game, a paper Ponzi. There is not enough gold at these prices to satisfy physical demand if even a fraction of those COMEX paper contracts were stood for delivery. And you know who sees that? Central banks, sovereign wealth funds, strategic advisors who are insiders to this very system. This is about preparing for what comes after confidence in the dollar breaks down. And I don't say that lightly. The Fed is cornered. They've destroyed the purchasing power of the dollar, not just through money printing, but through the destruction of velocity and confidence. The only thing that's held this whole thing together was the illusion of control. But now we've got inflation that's not transitory, job markets cracking, debt levels that are literally unsustainable. And we've got a gold market where physical delivery delays are being explained away by logistics. Come on, that's not a logistics problem. That's a supply problem. That's a confidence problem. And let me say this, when the system starts to break, and I mean really break, you're going to see premiums on physical metals that will make today's prices look like a joke. Look back to what happened in 2008. Look at what happened in 2020. In both of those crises, there was a moment, a very narrow window, where you could still buy gold and silver. Then the premiums exploded. Dealers ran dry. You could have all the dollars in the world, but no one would sell you metal. That's what a real breakdown looks like. And it's coming. So when I tell you to hold physical gold and silver, I don't mean GLD, I don't mean futures contracts, I don't mean any ETF where someone else holds the metal. If you don't hold it, you don't own it. Period. The insiders know this. That's why they're reshoring, repatriating, and converting paper gold into physical while they still can. And the rest of the world, still asleep, still chasing yield, still trading tech stocks and betting on crypto. It's not that those assets can't play a role, but they are not foundational. They are not safe. Gold and silver are. Ask yourself, if gold is such a relic, such an irrelevant pet rock as some pundits claim, then why are central banks buying more of it than at any time in the last 70 years? Why are sovereign nations repatriating their reserves? Why did Germany, Hungary, Poland, the Netherlands? Why did all these countries rush to bring their gold home in recent years? Why is the Bank of England seeing drawdowns at record speed? Because they know what's coming. They're not waiting for CNN or Bloomberg to tell them. They already know. The only question is, do you? You know what this reminds me of? That scene in Titanic where the ship is already sinking, but the music is still playing. People are still sipping champagne. They're in denial. They think there's more time. And then the lifeboats are gone. The water's rising. That's where we are. The gold is the lifeboat. The silver is the lifeboat. But most people haven't even walked to the deck yet. So what should you do? Get physical. Get real. Get out of the system while you still can. Don't wait for the announcement. Don't wait for the headlines. By the time the Fed or the Treasury admits that there's a problem, the window will be closed. You'll be locked in a digital system with programmable currency, capital controls, and a new set of rules that will not be written to protect you. And let's be clear, this isn't about fear. It's about preparation. It's about seeing the signs and taking action while you still have the freedom to do so. History doesn't repeat exactly, but it rhymes. And this song, it's one we've heard before. Only this time it's global and it's irreversible. If you're watching this and you're still on the fence, I want to challenge you. Go look up the gold revaluation account. Look up Basel III. Look at the COMEX delivery reports. Ask yourself why premiums on 100-ounce bars are rising even as spot prices are stable. Ask yourself why central banks are not just buying gold, but demanding delivery. The answers are right there in front of us, if we're willing to look. And for those of you who've already taken steps to prepare, who've got physical gold and silver, who've built your food, water, and protection plans, I say well done. Keep going, stay alert, because this game isn't over. It's just entering its final act. In the end, it's about freedom, it's about sovereignty, and it's about making sure that when this paper system burns to the ground, and it will, you're not left holding the ashes. You're holding something real, tangible, immutable, eternal. You're holding gold, you're holding silver, and that, my friends, is how you survive the storm. Be your own central bank. Don't wait. Act now. Because the reset is no longer coming. It's already begun.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.